Hello, my name is Adam Short, and I am an advanced certified Intuit QuickBooks Online Pro Advisor and also an IRS enrolled agent tax professional with Short Financial Group. And you can find additional videos on our website at shortfinancial.com. Today, I'd like to talk to you about some of the different reports in QuickBooks, specifically comparing sales reports with your profit and loss statement, and some of the similarities and differences between the two. We're in Craig's Design and Landscaping Services, and this is a fictitious business. This is the QBO test drive that you can access for free. If you Google QBO test drive, and then they'll let you kind of play around and experiment. So here we are on the home page. I have pre-loaded a couple reports here in these two tabs, but the way to get to these reports, if you click Reports, and then in this case, we want to run a profit and loss for this year to date. So you click Customize and then this year to date, and then Run Report. And I ran it as accrual basis, but you can change it to cash basis right here and click Run Report again if you'd like, depending on whether you're a cash basis taxpayer or accrual basis taxpayer. So again, I've already run these reports. And the other report that I ran was your sales by products service summary report this year to date. And this is under your reports section as well. And this is the accrual basis. So a couple things, first of all, about the differences between the sales report and the profit and loss statement or income statement. Sales report is item based. And what that means in QuickBooks is for what you are selling as your business, whether it be a product, service, or both, those items are entered into QuickBooks under your gear icon. And then if you click products and services under lists, that's where you set up all of the items that you're selling, whether it be a service or a product. And you set up the name, the description, the type, the sales price, your cost, and whether or not it's taxable, and whether or not you track the inventory. That becomes very important because on your sales report, those items will show up as they have been configured in your products and services area. So if you, for example, are recording invoices in QuickBooks and not associating them with items, or you generate a sales receipt in QuickBooks and you just enter an income account, or you make a deposit in QuickBooks and you deposit the funds directly into an income account, posting to an income account, none of that activity is going to show up on your sales reports. That's very important to remember. You can run a sales report and actually miss a lot of information, a lot of transactional activity for that reason, because sales reports only show the items that were sold. Okay, so it's important to remember when you are reviewing your financials that you don't miss information that you think isn't there, but it is there. It's just not showing up on your report, if that makes sense. So you look at your sales report and you've got your different items and categories. And you've got your subtotals for various types of categories you have. I can always go in here and I can click any number that turns into a hyperlink that turns blue. I can click that and it'll give me a breakdown. So let's say I want to know, what this $2,250, what makes that up. So I'll click that and I'll get a detailed report. And here you'll see, as I mentioned, all the invoices and sales receipts that correspond to that amount. Remember, the only way that these invoices and sales receipts will show up in my sales report is if they have the items in there. So I'm going to click this invoice just to show you what I'm talking about, to kind of get to the root level. This is an invoice, and under product service we have design, and that's an item. Again, that's a product service right here. And the amount was 75, or I'm sorry, the rate was 75, but the amount was 750. So that's why it shows up in the sales report, because it was an item. So I can go back to the report summary here and get the total number of my sales. quantity and amount. Okay, so let's go now over to our profit and loss or income statement, depending on what you're used to calling it. Remember, we just looked at this 2250 here. That is derived from the items that were sold that correspond to the design income account. With every product and service, you assign an income account, usually an income account. There are exceptions. You can assign products and services to a liability account if you have deferred revenue, but those are exceptions and generally not recommended if you don't know what you're doing. So again, design. So we were just looking at this design product and service. If I click this edit button, it will show me which income account that this is mapped to, and it says design income. So what that means is that is where all of the income associated with that product or service will show up on your chart of accounts and your profit and loss statement. So we go back to our profit and loss statement over here, and we see that this design and income is $2,250. So it does match the sales report. That's a good thing. But what if I decided I was just going to make a bank deposit, and let's say a customer paid me $1,000 for a service, and let's say it was the books by Bessie, and the account was design income, and I put in $1,000. Okay, she paid me cash, and I took it right to the bank, and I'm depositing it in my checking account today, May the 10th, save and close. Is that wrong per se? No, it's not wrong necessarily, but it does impact your reports, and it's not really the best practice. So you see, as I saved and closed, this report updated, and now I have an additional transaction here that lists the deposit we just made of $1,000. And now the total is $3,250. I'm going to go back to my P&L main summary, and now it says $3,250. Okay, what do you think happened to the sales report? I'm going to click the sales report, and I'm going to refresh the sales report here to see what happens. Let's see if any changes happen on the sales report. And what do we see? We actually have the same amount that we did before we made that $1,000 deposit. We have $2,250 here. That $1,000 does not show up on the sales report. That is a problem. And the reason for that is because it was not entered the proper way in QuickBooks. You made some shortcuts when you made that transaction. Again, here's the income's in there. You've recorded the income, but if you're trying to analyze the performance of your business from a sales report perspective, you are missing information. So again, just to understand the mechanics of how QuickBooks works, if you are using sales receipts and invoices and using the items, the product service items, to record the income, you're going to do a way better job of measuring your business performance than if you just make deposits of income directly in your bank account. So hopefully this has been a little helpful in analyzing some of the differences between your sales report and your profit and loss statement, and how to prevent misreporting in your financials. You can check out additional videos and resources on our website at shortfinancial.com. Until then, happy bookkeeping.